Transfer of property from one person to another person is a transaction. There are two types of transaction. One is called cash transaction, another is called the credit transaction. Any goods you purchase in the form of cash is called cash price. If the hire purchaser fails to pay any one of the installment, the hire seller has got the power to take back the goods. That is called the word called reposition. Hello, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Aid College, the Temple of Excellence, MYSURU. Today, I am going to have Financial Accounting 1, First Semester Session 1 in favor of question paper April-May 2002. You come under the new scheme called MENEP. So, the last year, they made the question paper pattern has been changed. I will give the pattern of the question paper, how they will ask. I will do the section A and section B today. Then tomorrow we'll deal with the section C, 15 marks question. So I will go very slowly because the examination and only 2 days are there. So that I will go very slowly. What are the questions they are going to ask? How to answer these questions? I shall move on now. This is the pattern of the question paper. You have to answer. Totally is 60 marks, 40 is the internal. The total percentage we require is 40 marks. That means about this paper minimum is 40. Total paper is 40 marks you have to take. In writing, no, you have to get the 21%, means 21 marks. Another 19 marks, your what's called assignment is considered. What is the pattern of the question paper? So, section A, you have to answer any 5 questions out of 7. Each question carry 2 marks. Very simple question covering all the chapters. Then part B, answer any 2 questions out of 5. Then here, each question carrying the 10 marks, 2 into 10 is 20 marks. Section C, answer any 2 questions out of 4 questions, all practical question, 1 theory. 3 practical, 1 theory question. General theory question we are going to ask is concepts and convention of accounting. I will repeat, concepts and convention of accounting. This is a very common theory which you are going to ask. So another 3 is called coverage of the practical. Generally, it may be hire purchase system or installment system, 1 from royalty, 1 from final account. We'll move on. Now, answer the following question. 2 marks question, we are going to get the answer. What is the first question? Each question. Define accounting. What is accounting? According to American Institute of Certificate, we clarify this is certified by the public account. Accounting is the art of recording, classifying, and summarizing the significant manner in terms of money transaction, What do you mean by transaction? Transfer of property from one person to another person is a transaction. There are 2 types of transaction. One is called cash transaction, another is called the credit transaction. We deal with the money transaction and events which are in part of the, at least of the financial character. Only financial character will be taken into consideration. That is called interpreting result of their end. So cash transaction, how much cash has come, how much cash has go, we are going to deal. Then, what is cash price? Cash price, the price at which goods may be purchased. Goods may be purchased for cash. So any goods you purchase in the form of cash is called cash price. It is the price paid or received for immediate delivery of a good or asset. Whatever the asset purchase, whatever the goods you purchase, pay the cash immediately. That is called the cash price, we say. What is minimum rent? The minimum rent is the guaranteed minimum which the lessee is required to pay the lessor. In royalty system, we got 2 parties. One is called the lessor and is called the lessee. Lessor is the owner, lessee is the utilizer of the particular patent right. So it is the minimum amount guaranteed by the lessee to lessor. When the to pay the lessor is any year, whatever may be output or sale. So here there is an agreement between the lessor and the lessee. Every year he is going to pay the royalty by utilizing the particular patent rate. If the royalty is less, he is going to give the what's called the minimum rate. It's a guaranteed amount paid by the lessee to the lessor. When the royalty is less, he is going to pay the minimum rate. So you should be prepared for those years when there is a short working. This is because in the year in which there are no short working, the minimum rent is merged into royalty and there is no question of payment of minimum rent. This minimum rent is also known as dead rent. When the royalty is less, then only there is a question of minimum rent. When you are getting the more royalty, you are going to pay the royalty itself. If you write this only, this okay for the 2 marks question. Then state any 5 Indian accounting standards. The accounting standards are Indian ASB is Accounting Standard 1, presentation of financial statement. 2 is inventories means stock, statement of cash flows. Cash flows means cash inflow and cash outflows are considered. Accounting policies, changes in accounting estimates and errors. Then events after the balance sheet. After the balance sheet prepared, what are the events to be happen? So these are all the standards of the financial accounting or standards of accounting we say. We'll move on to next question. What is an installment system? It is an agreement between the seller and the buyer. It is an agreement between the seller and the buyer. When the goods pass, in the case of installment, when the goods pass from seller to buyer, along with the goods, the rates of the goods will pass from seller to the buyer. If the buyer fails to pay any one of the installment, the seller cannot recover the goods, but he can go to a court against the particular, he can sue the particular purchaser. So here, it is an agreement between the seller and the buyer. The possession as well as the ownership of the goods passes from the seller to the buyer immediately on the entering the agreement. When the goods have been purchased, automatically goods passes. Along with the goods, no, the rights of the goods passes from installment seller to installment purchaser. But the buyer agrees to pay the total price in installment. Whatever the price you got, he is going to pay in the number of installment, which includes the interest. First, he will pay the down payment. The balance will be paid in the number of installment. Each installment includes the interest. Name the branches of accounting. The branches of accounting, don't explain, just mention them. One is financial accounting. Number 2 is cost accounting. Number 3 is tax accounting. Number 4, management accounting. Number 5, social responsibility account. Which are the 5? Financial accounting, cost accounting, tax accounting, management accounting, social responsibility accounting. We'll move on. What do you mean by reposition? REPOSSION. When the hire purchaser does not pay the installment, the vendor or seller can take back the possession of the goods, or say, in case vendor take the possession of all the goods, it is called complete reposition. So when the goods passes from hire seller to the hire purchaser, the hire seller is the owner till the last installment is paid. If the hire purchaser fails to pay any one of the installment, the hire seller has got the power to take back the goods. That is called the word called reposition. If the entire goods is taken, it's called complete reposition. Only part is taken, it is called a partly reposition of the goods. Who will take back? The seller will take back, because who failed? The buyer pays. The seller has got a right to take back the goods. Under this system, the rates of the goods does not transfer from seller to the buyer till the last installment ends. If the entire amount is paid by the buyer, then only he becomes the owner till seller is the owner. This is the point. So all the 7 questions has been answered here. Question number 8. What do you mean by accounting standard? So here each question carry 10 marks here. Accounting standard and difference between INDAS and IFRS. So accounting standard can be form of the statement which consists of rules and regulation regarding the accounting principles are concerned. So accounting standard has certain rules and regulation. According to that rules only, we will go through the notes detailedly, but I will give the only hints of the notes here because we'll go to a problem only. So accounting standards are the rules and regulations framed by accounting institution for the preparation of uniform and consistent financial statement. So they have got their own rules and regulation. According to that regulation, you have to follow the what's called the financial statement. Then here difference is IFRS and Indian asset. This is stands for International Financial Report, stands for Indian Accounting Standard. So developed by ISAB International Accounting Standard, developed by MCA, Ministry of Corporate Affairs. So followed by 144 countries across the world. This IFRS across the world, followed by only India. Here, disclosure. Companies complying with IFRS have to disclose as a note that the financial statement they have to show. But whereas such a disclosure is not mandatory for companies are considered. Financial, it includes statement of financial profit, statement of profit and loss account, statement of changes in inquiry, statement of cash inflow. Here you have to prepare profit and loss account and a balance sheet, cash inflow, cash outflow, disclosure of account, disclosure of policies. Then balance sheet. Company compliant to IFRS need to have specified the guide for preparing. Balance sheet is compulsory. Company complying within INDSS need not have no such requirement. Balance sheet here compulsory, balance sheet may not be compulsory here. Then come back to the question now. Question number 9. Akshar Travels Limited purchased 2 cars from Light Motors on hire purchase system on 1/4/2015, payable 50,000 on delivery, balance as follows: 1,50,000 on 16. So first installment, second installment, third, fourth, fifth. Interest is charged at 10% per annum. Ascertain the cash price of the car using back calculation. Back calculation means how? From the fifth standard we have to pay. Fifth installment minus interest, add fourth installment minus interest, add third installment minus interest, add second installment minus interest, add first installment minus interest, as add down payment, that's the cash price. I will repeat. Fifth installment minus interest. If the rate of interest is 10 by 110, if the rate of interest is 5 by 105. If the rate of interest is 20 by 120, that is say rate divided by 100 plus rate. So how it is be? Fifth installment minus interest, add fourth installment minus interest, add third installment minus interest, add second installment minus interest, add first installment minus interest, add down payment, that is the cash price. Same thing we are going to deal now. What's the percentage? 10 means this is rate, 10% rate divided by 100 plus rate. This is 10, 100 plus 10. 10 by 110. 1/11. This way. What's the position? 10% means 10 divided by 100 plus rate. 10, 110. This is 1/11. So your fifth installment is 1,10,000 minus interest. 10 by 110 is 1,10,000 is 10,000. Balance is 1 lakh. This is your balance. Then add back fourth installment 1,20,000. It becomes 2,20,000. Less interest 2,20,000. So 10 by 110 is 20. There is nothing but 1/11. 20,000. Your balance is 2 lakh. Add third installment 1,30,000. It becomes 3,30,000. Less interest 1 by 11 of 3,30,000 is 30,000 gone. Balance is 3 lakh. Add second installment 1,40,000. It becomes 4,40,000. Less interest 1 by 11 of 4,40,000 is 40,000 gone. Balance is 4 lakh. Add first installment 1,50,000. It becomes 5,50,000. Less interest 1 by 11 is 50,000. Balance is 5 lakh. Add down payment is 50,000. The cash price is 5,50,000. So understand that. So fifth installment minus interest, add fourth installment minus interest, add third installment minus interest, add first installment minus interest, add down payment. We'll go to the ledger, what they ask. Here, first we have to prepare the Light Motors Limited. So, what is the cost of the motor car? 5,50,000. Interest is, so out of that, how much down payment is made? 50,000. And interest of the first year is 50,000. So, two bank is 1,50,000 you are going to pay. Here is the first installment you are going to pay. This is your two bank is the down payment. Two bank is the first installment. So, 5,50,000. You have paid the 50,000. What's the balance? 5 lakh. On the 5 lakh, rate of interest is 10%. 10%, 50 becomes 6 lakh. He paid 50,000. First is the 4 lakh. Balance is 4 lakh. On the 10% is 40,000. 4 lakh 40,000. Second installment is going to pay 1 lakh 40,000. Balance is 3 lakh. On 3 lakh, 10% is 30,000. He is going to pay 1 lakh 30,000. Balance is 2 lakh. Then 10% of 2 lakh is 20,000. So that installment is 1 lakh 20,000. Last installment, by balance brought down 1 lakh, by interest 10,000, two bank account 1 lakh 10,000. Brought down two bank, first installment, second installment, third installment. Then question number 10. Ashok purchased a printing machinery from Quality Printers on installment system on 1/1/2016 for rupees 84,000. The down payment was 18,000 and the balance to be paid in 3 equal installments along with 8% interest per annum. Ashok charged depreciation at 10% on reducing balance method. Prepare machinery account and Quality Printers Limited in the books. Here, what's the amount to be paid? 84,000. How much down payment is made? 18,000. So balance is 66,000. In how many years they are going to pay? Balance to be paid in 3 equal installments divided by 2 means 22,000 plus interest, 22,000 plus interest, 22,000 plus interest. See that? What's your cash price? 84,000 minus down payment 18,000. How much amount payable? 66,000 divided by 3 means 22,000. What's your outstanding balance? 66,000. On that 8% is 5,280. He's going to pay 22,000 plus 5,800 means how much he's going to pay? 27,280. Here principal money how to deduct? 22,000. What's the balance now? 44,000. Every year how much he pays? 22,000 and outstanding 22,000. 8% of this will work out 3,520. This becomes 25,520. Now he is going to deduct 22,000 here. What's the balance? 22,000. Now on this 22,000, 8% is 1,760. Total is 27,760. He is going to pay 20. It becomes nil. If you add all the interest, it works out 10,516. Regarding the depreciation, 84,000 is saved there. 10% is 8,400. If we deduct 8,400, it becomes 75,600. 10% of the 7,560. If we deduct from 75,600, if we deduct 7,560, it is 68,040. 10% makes 684 now. This is your depreciation. This is the amount of interest. Slowly we'll go. See that. What is the cost of the we purchase? Machinery account data from the installment seller. How much you purchase? 84 seller, 84,000. Depreciation 10% is 8,400. Balance is 75,600. Then two balance brought down 75,600. 10% of this is 7,560. The balance carried down is 6,840. Brought down 68. 10% of this 6,804. At the end of the year, the balance is 61,236. It is diminishing balance method. The cost of the machinery is 84,000. 10% of this is 8,400. Your balance carried down is 75,600. Balance is 75,600. 10% of this is 7,560. Your balance carried down is 68,040. 68,040. 10% of this is 6,804. Very simple. On the balance depreciation. Then regarding the quality printers is there, seller account is there. So you purchase the machinery, printing machinery for how much? 84,000. Total interest suspended. You know, in the installment method, all the interest should be added. The total is 10,560. Then two bank account first down payment, two bank account first installment. Balance is 49. This is down payment. This is first installment. 49,280. Brought down two bank accounts. No interest should be added because all the interest have been dumped here. Total interest have been dumped here. No interest calculation is there. How much money to be paid? 49. That second installment, how much he pays? 25,520. What's your balance? 23,760. 23,760. Two bank account last time he clear out. What is the total value? 84,000. Total interest is 10,560. He pays, this is down payment. This is the first installment balance. Balance brought down, two bank account. This is your first installment. This is your second installment. This is your third installment. Two by balance brought down, two bank account, 25,520. Brought down 25, brought down here. 23,760. Last installment, he clear up 23,760. Very easy problem. Then question number 11. Mrs. Monica wrote a book on financial management, got it published with money publisher on the terms that royalty will be paid at ₹10 per copy sold, subject to minimum rent of 30,000 per year with a right to recover of short working during the first 3 years. The details are as follows. So, year 2007, number of copies 2000, number of copies in stock not yet sold 200. Next year, he has to prepare minimum rent account, short working account, right? So, what is royalty? It is an agreement between the two parties. One is called the lessor and is called the lessee. Here, lessor is called the printing press. The lessee is the author. Lessee is called the author. He will write a book and get the compensation from the owner. So, author write a book, some compensation we are going to receive from the printers. So, because they are the money maker, they will pay some compensation for writing your book. That is called your royalty. So, here number of copies printed. How to work out now? So, you have this formula, calculation of number of copies sold. Here in your question, per copy sold is, remember, 10 rupees per copy sold, we have to give as a royalty to the author. Per copy, 10 rupees. Come back here. Opening stock is nil. Number of copies printed 2,000. How much left over? 200. Number of copies sale is 1,800 into rupees 10. So the closing stock of the 2017 become the opening stock for 2018. 200 plus 2,000 minus 250 is equal to 2,900 into rupees 10. What's your closing now? 250. That becomes the opening balance. Then this year number of copies printed is 4,350. Number closing stock is 100. How much sale? 4,500. Balance is at rupees 10. Then you have to prepare a table called royalties analytical table. See that 1, 2, 3, 4, 5, 6, 7, 8, 9 columns are there. So when you see the word called royalties, ROYALTIES. How many words? 9 words are there, means you have to must have 9 columns. We'll repeat: royalties, ROYALTIES. 9 words means you must have 9 columns. See that? First column 1, this is 2, this is 3, this is 4, this is 5, this is 6, this is 7, this is 8, this is 9. You remember that, 9 column. So your output, he writes 1800 per copy is going to serve or to be still 18,000. He has to receive the royalty with a minimum rent of 2. The law says either the royalty or the minimum rent, whichever is more. What's the procedure? Either the royalty or the minimum rent, whichever is more. Which is more here? We have to pay the minimum rent. So there is a shortage of 12,000. Short working not yet recover. 12,000. Recover no. We have to pay whichever more is 30,000. Either the royalty or the short, either the royalty or the minimum rent, whichever is more. Next year, your sale is 2,900 into 10 means 29,000, but your minimum rent is 30,000. So you have to pay the 30,000. Once again, there is a shortage of 1,000. So 12,000 plus 1,000 becomes 13,000. Short working recover now. Last year, all the shortage should be recovered in the third year. 13,000. So shortage 12,000 means 13,000. Then 30. Last year, your is 4,500 into 10 is 45,000, but minimum rent is 30,000. So what the printer will do now? First, he will pay the 30,000 out of 45,000. He will recover how much? 13,000. What's the balance left over? That 2,000 will pay to author. 30,000 plus 2,000. How much recover shortage? 13th, the entire 13,000 has been recovered. No loss to the, especially for lessee is considered of either the minimum rent or the royalty, whichever is more. Now, he has to prepare. First is minimum rent. What's the entry? Royalties account data, short working account data. First entry, minimum rent account data to landlord. If there is author, minimum rent account data to 30,000. So we have to pay the 30,000. For this 30,000, if you see the chart here, for this 30,000, how much you receive? 18,000 as the royalty. Short working 12,000. Same thing you are doing. We received 18,000. How much shortage? 12,000. Next year, once again, you are royalty. We are paying the minimum rent of 30,000. For that, how much royalty received? 29,000. How much short working? 1,000. So in the next year, there is no question because royalties are more. Then come back to short working. First year, what's the entry? Royalties account data, short working account data to minimum rent, or we can say that royalties to minimum rent, short working to minimum. What's the short working? Minimum 12,000, carried down. Next year brought down 12,000. Second year also minimum rent is more. How much shortage? 1,000. What is the total short working? 13,000. By balance carried down 13,000. Last year 13,000. Your royalty is more. We recover from the royalty how much money? 13,000. Shortage happening. So shortage only recover when the royalty is more than the minimum. Here minimum rent is more. Second year also minimum rent is more. Third year royalty is more. So we recover. Hope so. So royalty account, minimum rent, royalty to minimum rent 18,000. Transfer to profit and loss account, royalty to minimum rent is 29,000. Transfer to P&L account. Then you understand this. See that? See the royalty table. You can. What's your royalty? See that. First year 18,000, second year 29,000, third year 45,000. Royalty to minimum 18,000, transfer to P&L account. Royalty to minimum 29,000, transfer to P&L. Last year, your royalties is small. We recover. Royalty to author, we paid 32,000. How much recovered? 13,000. Entire 45,000 has been transferred to profit and loss account. Hope you understand. First year shortage, minimum rent is more. How much shortage? 18,000. Your royalty is 18,000, transfer to P&L account. Second year royalty is 20,000, 29,000, transfer to P&L account. Last year royalty is 45,000. Out of that, 32,000 paid to author. The balance has been recovered of shortage. This series they are going to ask. This is the IFRS and ASS. This is stands for International Financial Report stands for Indian Accounting Standard. So they will ask for the 10 marks here. This is important. Here, developed by ISAB, International Accounting Standard. So IFR, International Financial Reporting Standard, is based on, developed by International Accounting Standard. It is developed by Ministry of Corporate Affairs, followed by 144 countries in the world, IFRS, whereas it is followed only in India. Here, companies compliant with IFRS have to disclose the note of the financial statement. Means they have to show the profit and loss account and the balance sheet. Such disclosure is not essential in case of INDS. Here, financial includes statement of financial position, statement of profit and losses, statement changes in equity for the period, means equity has been increased or decreased, cash inflows means that period, cash inflow, outflow and inflow. Here we are going to prepare profit and loss account and balance sheet, cash flow, statement of changes, notes on financial, disclosure of the accounting policy. What are the policy we are following? Then balance sheet for companies complaint. IFR need to have specified guideline for the balance sheet. Complaint Indian has need to have no such requirement of the balance sheet. Here we have got a specified type of balance sheet which you are going to pay. Here is not so much specified. Go understand that. Slowly you go through in the examination. When the question paper is given to you, you just read out the question paper 3, 4, 5 times. Then you sit in the bench or whatever you stayed there for, because your body is in acceleration. So come to normal level. First read out the question paper slowly. First time when you see the question paper, you may see that you not understand anything. So you go through the what's called, once again at least some sentence you have got. If you know the 2 marks question answer, write the first 2 marks question so that you can have a confidence. So the question paper will be very easy. Don't worry about others, whatever may be say. Question paper will be, you concentrate one. First question, 15 marks question. If you feel difficult in problem, go with the theory, concepts and convention. Concepts and convention is a compulsory 15 marks. One more question you have to prepare. Either the final account or the hire purchase system or the royalty, which you feel difficult. Section B, easy question. One installment backward method they will ask. One difference in IFRS and Indian accounting standard they will ask. Then one more question, very simple, royalty, very simple question they are going to ask. Section A, 5, 2 marks, very, very simple. What is royalty? What is short putting? What is a cash price? What is accounting? Simple, very, very. What is depreciation? Depreciation means fall in the value of the fixed asset. Fall in the value of the fixed asset is called depreciation. Very, very simple question will be asked. Don't be nervous. Don't be nervous. Yeah. Examination is such a way that hours, 2.5 hours is very precious for you. Read the question paper 2 or 3 times and get the answer to it. Hope you do well in the examination. I think whatever I told you as a senior teacher, you just listen to us so that we'll do the examination well. Best of luck in the coming examination. Once again, I say best of luck in the examination. Tomorrow, I'm going to solve 15 marks. Just go through the whatever the YouTube. You can understand how you are going to solve. Slowly you can understand. I will go slowly tomorrow. Another 2 problems, one final account, one royalty, one hyper system. I am going to solve tomorrow. Please go through it. Best of luck in the examination.